Welcome back. Here's a look at where markets ended a week of more record highs for stocks with just over 2 weeks until Election Day. This on the heels of strong third quarter earnings, better than expected September retail sales as well. Joining me now is the founder of the Bear Traps Report. He is the author of How to Listen When Markets Speak. Larry McDonald back with us. Larry, great to see you. Thank you so much for being here.
Hi, Maria.
Well, your book was so spot on in terms of identifying what markets are telling you and how to trade around it. What is the market telling you today, Larry?
You know, the biggest thing, Maria, when you're looking at the election and polls, it's really, you want to look at polls, you want to look at the betting sites, you know, where people are wagering. And then you also want to look at the trades. So if you look at the Kamala trades, which would be Kamala Harris trades, you know, solar names are down 30% on the year. Cannabis stocks are essentially flat. But you look at the Trump trades, private prisons up 30% on the year. Fannie and Freddie up even more. Fannie and Freddie, and you got to remember John Paulson has a big stake there. So a lot of the Trump team, you know, the people feel that that's very bullish for Fannie and Freddie. So in other words, the Trump trades are all pricing in a big sweep for Trump. I'm telling you, like House, Senate, and the White House.
Wow. And you know, we've got lots of policy changes if that were to come. If Trump returns to the White House, you're talking about tapping into America's energy capacity, extending the tax cuts. You're talking about economic growth being a priority, which is what President Trump has said many times. Are there areas to put money to work if you do, in fact, believe Trump will return to the White House?
Well, a couple things. In 2016, when Trump won, the IWM, the small caps, were up 50% over the next, I think, 18 months, 5-0. If you look at the regional banks today, this is really something. The regional banks are pricing in massive deregulation. They're the highest amount of like overbought condition this week in the regional banks that we've seen in years. And so the regional banks are really, and the Russell are starting to tell you once again, it's a Trump victory. But I think overall, the best value is in the Russell because that really hasn't performed as well as much of the market over the last couple of years.
Now, you've also talked about potential for 20 to 30% downside risk to stocks. Do you expect a sell-off after the election?
Well, I think what's happening is in 2016, when Trump won, stocks were rough, had a big rough patch into the election. And then when he won, you had a huge move in a lot of things. This time, the S&P 500 is up 46% year over year into the election. 46% year over year into the election. That's a big move. And I think that we're going to have a massive problem with treasuries in the first quarter with interest rates because Janet Yellen has been able to push all those treasuries into T-bills in terms of issuing new bonds. And the next Treasury Secretary is going to have to push those maturities out and issue longer dated bonds. And that's going to create some problems in the first quarter. So, yeah, I think we could be down 30% by March. But then overall, you know, Trump's market-friendly policies over the course of 4 years are going to be great for the stock market.
Larry, what do you make of big tech? In about a week and a half, we are going to hear a whole host of tech companies reporting their quarterly numbers. We've got Tesla out on the 23rd, Google out on the 29th, Meta, Microsoft out on the 30th, Amazon and Apple out on the 31st. These stocks obviously have had outsized runs. Would you be selling into any rally going into the earnings releases in a week and a half?
Well, something very mysterious is going on. Since July, the NASDAQ 100 has lost $1.5 trillion, Maria, $1.5 trillion. So it's gone from $24.5 trillion to 23. And so there's definitely a migration going on. If you look at the performance of, say, Microsoft and Google and Amazon and Tesla. So there's already a substantial migration out of these stocks. But I think the biggest thing is when you talk to professional investors, and most of our clients are on the institutional side, the only way to pay for a $35, $36 trillion debt hole is to, and Trump's alluded to this, and Elon Musk in recent days, they're going to start to go after these companies on some type of special tax, windfall profits tax, or whatever it is. And so I think I think, and unfortunately, there could be some bipartisan agreement on that to some degree next year. And so, yeah, so that's going to create a problem for the big cap tech names. And I think the market, the beast in the market, that sniffer into the market is already picking up on this. Yes, I would sell any exposure to big cap tech right here. And you just want to move into value stocks and commodities at this point.
All right, we will leave it there. Larry, always a pleasure. So many insightful themes from you. We appreciate it. Thank you so much.